Okay, so this is my 50, 200 moving average strategy. So let's configure this. So what I'm going to do is add a 50 period, and we're just going to use a simple moving average. So 50 period SMA. And our second moving average, again, simple moving average, is going to be a 200 period moving average. Okay. Okay, so simple setup. We're just using two simple moving averages, a 50 period and a 200. Let me go ahead and pull up a chart of Micron. Okay. And let's kind of go through the rules here. So as I mentioned, this can be used for both bullish and bearish positions. We'll start out looking at bullish positions and the rules for that, and then all the rules for bearish positions would just be reversed. And we'll look at some of those. Okay, so let me, I'm going to just go ahead and put the kind of the rules here on the chart so you guys understand what they are. So we're using a 50 period simple moving average and a 200 period simple moving average for our indicators. Okay, we're gonna add a trade trend in here as well, but I'll show you how this can be traded, with and without trade trend. Trade trend does really well with this this setup. Okay, so for a bullish position, so for buying opportunities, okay, the rules are 50 period SMA above the 200 SMA. Okay, so you can see like on Micron here, that just to clarify, the blue line is our 50 period simple moving average. The red line is our 200. So we want to see the blue for buy signals, the blue above the red. So the 50 period above the 200 period. The second rule is not required, but ideal. So ideally what I want to look for is both SMAs sloping up. So so you can see like here we've got, let me get my, so I'll just point out where there were some buying opportunities, but here we have 50 period above the 200 period and both sloping up. So generally, if there's ever any confusion around that, for instance, here, they're not, the 200 sloping up, but the 50's a little flatter. Look for them to be, at least moving parallel to each other or diverging like they are here. We're back here. We're starting to get, the cross obviously was back here, but as Micron trended up, the 50 period began to diverge from the 200. Because that's kind of what we're, again, not required. There are still viable setups where maybe the 200 is converging with the 50 is converging with the 200. But the real bread and butter and what I really want to see is both of these upward sloping and either parallel or diverging. This indicates that there is a strong bullish trend intact in place. So those are the rules for the moving averages. Now let's incorporate price action into this. Oops, sorry, I didn't want to do that. Let's keep those on there. All right. So what would create a buying opportunity? again, there's a couple different rules we can use here, but nearly always it's going to be price coming down from above the 50 and 200 period SMAs down into what I call the buy zone. Okay, so the buy zone is this area in between the two moving averages. Okay, so this is called the buy zone. It's in here. Okay, so rule number one is price. Okay, so we're just looking at the actual price of the stock or whatever asset we're trading. Trades down into the buy zone. Okay. So we can see a number of occurrences there where that's taking place. We have price breaking out to the upside and then coming down into the buy zone. All right. So this is where trade trend will come in here momentarily as we'll look at how to incorporate that. But in the absence of any other indicator that gives us forecasted buy or sell signals, what we want to look for in terms of price action is once the asset comes down into the buy zone. Now, there's a couple ways that this can be traded. You could, one option would be to buy the asset while it's trading in the buy zone. But I don't prefer to do it that way because at some point when that occurs, it could reverse, have a sustained reversal to the downside. We want to avoid that. So I look for an extra step in terms of confirmation, and that is for price to come back above the 50 period SMA. So after price trades down into the buy zone, price exceeds the 50 period SMA. So here's a good example of that right here. And we'll zoom in on some of these here in just a second. But let's get the rules down first. So notice how price came down into the buy zone and then subsequently back up. And then we have a very strong uptrend. Same thing down here. So price came down into the buy zone. Then we got a close above and a move up. Same thing here. Close above, back down, move up. Same thing here. Okay, so here would have been where it exceeded. Okay, so you can see these multiple examples of these on this micron chart. All right, and that's where we can go ahead and enter a bullish position. Now, as far as risk management, clear these out. Okay, I define my risk using the 200 period SMA or moving average. So, like if we just use this example, and don't worry, I'm going to zoom in on these. I just want to kind of give you the high level view first. So here was a bullish setup. So if I had entered on this breakout, so after price had entered the buy zone and then broken out above the buy zone or the 50 period SMA, okay, creates a buying opportunity. I like to define my risk by using a stop or whatever a risk management technique that you use below the 200 SMA. So again, on this one, stop below. This one, stop below. This one, stop below. This one, stop below. And generally when using that method, here's another one, you can define your risk and have a favorable risk reward ratio or profile. Okay, so you can see like the stop levels. And none of these would have been stopped out. They all would have been safe. Can give you really nice risk reward ratios, 2-to-1, 3-to-1, 4-to-1, so on. So that's how we define the risk, by placing a stop or some sort of risk management level below the 200 period SMA for bullish signals. Now we're going to incorporate trade trend here. So what I like to do is, and this is where you can use like the trade trend trailing stops. But let's first look at the entry. We'll just zoom in on this signal. Is look for buy signals either prior to or around this 50 period SMA breakout. So this was a perfect one. We get a buy signal here on Micron on February 22nd, confirmed trigger the next day on the 23rd, and we're off to the races. Same thing here. So this buy signal back on October 31st came in with inside the buy zone. So the entry would have been just above. Let me zoom in on this one here for you. Okay, so while the trade trend entry would have been just above this candle, if we had entered there, we would have still been within the buy zone. So again, I like to actually wait for a close above, outside of the buy zone to the upside, so above the 50 period SMA. So that actually happened the next day on November 1st. So yeah, you could have gotten in a bit lower on the trade trend entry. But what I'm really looking for here is the buy signal either within the buy zone. Okay, so here again, here it was on October 31st, or after we're outside of the buy zone. Okay, so either or, that is fine. And then you can use the trailing stop to manage. So these are the horizontal lines you see here to manage the bullish position.